Hey, how's it going, guys? And welcome back to the North Investor, where we all about personal finance on our path to financial freedom. In today's video, for the 7th episode of 1 year to beat the stock market performance, we are officially halfway before the end of this challenge. But before to share with you what has been my stock portfolio performance over the last 6 months, I'll make a quick recap on what were my initial objectives when I first started this challenge. Obviously, the goal is to aim for as much growth as possible without compromising my defensive positions, because the defensive stocks usually react better compared to the growth stocks in period of high inflation. Another objective that I currently have is to have a better diversification in my overall portfolio, which means that I want to add different stocks in sectors where I only have one stock at the moment. For example, at the moment I only have one real estate company, which is Raucan, but at the moment I'm actually looking to invest in another real estate company which is called Plaza Retail. And since I found a brand new job, I should have more liquidity now to invest in the stock market for the next couple of months. After, my fourth objective is to have a maximum allocation of between 5 to 10% in one stock. And obviously my main objective is to be able to beat the stock market performance over a period of 1 year. So let's get to my portfolio right now. First, I just want to say that this is for my stock portfolio, but most of my liquidity is currently invested in ETFs. But at the moment, I still have about $15,000 to $20,000 in cash that is ready to invest. But I might keep a little bit of it to invest eventually in real estate, maybe this summer or this autumn. For my 7 tech companies, as you can see, it has been a sector that hasn't been able to perform quite well over the last 6 months. And unfortunately, with what is going on in China right now, we can see that my worst performer in that sector is the electric vehicle Chinese company's NIO, and it has lost about half of its value only in about 6 months. After that, for my energy companies, we can see that they haven't been able to perform quite well over that same period, but we can see that the worst one has been by far Algonquin, that has been down of about less 43%. But the great news about those companies is that they are giving some great dividends pretty much every single quarter, and for Algonquin every single month. However, for the financial sector, we can see that my big Canadian banks as well as Manulife has been able to perform quite well, notably where Manulife has been able to be up of about 18%. And as you'll see later on in this video, it is why I've decided to add some shares in that particular stock, because at the moment, in my opinion, it is still undervalued and it is offering as well a great drip program. After, you can see that my 2 communication companies, which are Bell and TELUS, haven't been able to perform well on their side, but my consumption companies, Couche-Tard, has been able to have some pretty great return of about 7.5% over the last 6 months. And for my material companies, Savaria, we can see that it has been one of my best performer in my stock portfolio with a return of about plus 23% over the last 6 months. And Raucan, which is my largest stock position in my portfolio, which represent about 16% of it, has actually been able to perform quite well with a return of close to 9% over the last 6 months. And my super small position in 5 and plus has been returning about plus 56% in my portfolio over that same period. But now, let's see what has been my total stock portfolio performance for that period. So over that period, we can see that I've been down of about 2% on my stock portfolio, which is down of about less $1,600. But now, let's see what has been the market performance for that same period. As always, to track the overall market performance, I'll be using the S&P 500 index, which basically regroups the 500 largest companies in the US in terms of valuation. And for the market, you can see that it has been slightly up of less than 1%. So as you can see, with my own stock portfolio, I'm quite close from this market performance. And with the extra cash that I'll be able to generate from my new job, I'll be able to reinvest it all in the stock market, which means that for the next 6 months, I'll be putting out the gas to make the better return as possible with my stock portfolio. And keep in mind that I don't include the dividends in my total return, which means that with the dividends, I would be even closer to the market performance. But now let's take a look at what is my sectoral distribution for my portfolio. As you can see right now, I have 2 main tails, which are in the financial sector and in the technology sector, which are both worth about 31% and 25% of my portfolio. And I basically have this ponderation because the financial sector is one of the safest sector that I can potentially invest in. But on the upper end, you have the technology sector that is the riskiest sector to invest in, which has also the highest potential of return. Obviously, with this strategy, I'm trying to counterbalance the negative effects of both of these sectors. After, you can see that the real estate sector comes at the third largest sector in my portfolio with Raucan, followed by the energy sector with about 12% of my portfolio. And finally, you can find the communication sector, the material sector, the consummation sector, and obviously my smallest other sector. And as you can see, I still don't have any stocks in the healthcare and in the services field, mainly because at the moment, except maybe Johnson & Johnson, I don't really have any interest in both of these sectors. But maybe if I see some great opportunities and some great discount in the next couple of months, I might be a buyer on that side as well. Now for the transactions for the month of February 2023, you can see that I've made 2 big transactions during that month, where first I've bought 20 shares of TELUS for about $500 and 40 shares of Manulife, as I told you earlier, for about $1,000. But as I just told you, since I just got a new job, I'll be able to invest way more money in the stock market over the next couple of months. So it's going to be interesting to see if I'll be able to beat the stock market performance after the next 6 months. But now, if you're looking for what are the best stocks that you can buy right now in March 2023, well, check out the video that's going to be right over here, and I will see you soon. Peace.